Good morning. Today is Thursday, June the 30th. Pre-market shows plus 54 cents to the upside. Volumes 2.6 million. Yesterday, we ended the day with a minute 15-minute divergence that would really have been more like a 10-minute. But take a look at against what? This monster to the upside. And so I distinctly said, no way. This divergence worked here, and this is as much as he was able to pull back the price against this incredibly poised 60-minute chart. So we're in the middle of this super upside here. Let me pause and take care of the opening. So the market opened, and here's the upside. I can show you the 5-minute time lapse. Here's the pre-market, and there's the opening. Take a look at that 60, jumping from 47 to 62, and the 15-minute flattening and slightly turning up. Same thing there with the 5, and obviously we see it in the 1-minute chart. This pattern established on the 15 is not going to go away, and it is going to continue building until it pulls back enough to dent that hourly. It's going to undermine it. This is the beginning stages of the end of that upcycle on 60. Mark my words, it's going to happen. Now take a look at the price. Topping and coming right back down. We're now at 39. Volumes have increased to almost 4 million. Here's a picture of the actual market opening at around 57. It's coming right back down on this divergence. See, it surged above 207.30, and now it's at 207 and coming down. Now, here's the larger context. Here's the 60-minute time lapse. That's closing yesterday. And here's the opening today. Take a look at the daily. Jumps from minus 97 to minus 81. A significant technical move to the upside. So it is now official. The daily chart has turned up. Now take a look at the weekly. The weekly shrinks further, which is, it gains to the upside. It goes from 169 to 175. And we know what happened to the 60 and 15 respectively. Now, today is the last day of the month. Tomorrow is July 1st. And tomorrow is the plotting of the monthly and the quarterly. So it's going to be interesting to see the plot for these monsters in here. Here's a quick glance at BXX to the downside. Remember, I did say that yesterday. Take a look at the price over here returning to the upside after the pullback. We were looking at VXX doing the same thing. Now, VXX has an interesting 15-minute divergence, and the 60-minute chart is showing signs of weakness. You can see that the daily chart over here also plots down. So that's that. There's SPY. There's Qs. Take a look at that daily. What is this? This is a pullback. Now, remember we were looking at the channel regressions yesterday, and I think this was done at the beginning of my video. The pullback over here is not that much out of whack looking at the channel regression. It's just that it's a huge regression. But I think it's nearing its end. Let me show you the 2 and 4 hour charts respectively. Extreme direction 2 and 4. So this goes in sync with the channel regressions, and take a look at how now we are building a pattern again. So this should end the pullback, and now we are going to start to build negative pressure as we get ready for the continuation. Now let's see what type of pattern we create. Price is coming right back down here. Interesting. Let's take a look at Russell now. The daily is just in acknowledgement territory, hasn't turned like SPY or Qs or VXX. At the same time, the weekly has not been able to completely turn, which implies a pullback on trend, but we just don't have anything in these charts to support more upside. So this weekly is just going to drop from here because there's no fuel left for upside in here other than maybe a yearly chart. I'm not even going to open it. Then diamonds, same thing. Look at this daily turning up, and I'm looking at the context over here of the pullback. So let's see what happens here coming up on the 15-minute interval with the 15. 9:45, the 15 did not plot up. Take a look at this. There's the plot, and the price continues to want to come down. It's still in positive territory. 36, 37, 38, 9.7 million in volumes. Let's see what happens at the top of the hour. But before I take you there, just a quick pit stop over here on the 206 calls. If you remember yesterday, I did a pretty interesting video analysis of this particular strike price, the 206 calls, the quarterlies that expired today, and at the end of the day, they rallied. This little area here is the additional 15 minutes of trading available to the exchange traded funds, or ETFs. And here we can see those 15 minutes better represented, and how this thing made it all the way here. Unfortunately, this system with Options Express erases a lot of my markings. See, I have these two tops over here at 63% at 142. The 142 is still here, but we lost all the other markings. That would have been the best possible exit, but after an immense amount of risk. Yesterday, looking at this thing, I did say that the best exit would have been around here without adding a lot of unnecessary risk. This is a quick revisit on the very pattern that would have given you the entry. The 5-minute was completely spent and long, which means it's fighting the uptrend. And then you have a pattern of support to the upside of the 1 minute going in the direction of the very poised 60-minute chart. This is the moment of entry around 1:15 or so, and that puts you right here at this point. The 1 minute created an unmistakable upside divergence, as I just illustrated. And so from here, the price goes up. There's a little pullback. We talked about this yesterday. This is one of those 1-2 patterns where we establish that the trend can start here with a small pullback. That's scenario number 1. Scenario number 2 is a full retest where you build a divergence. Either or, it's a pattern that's going to change the direction. And when you identify a 1-2 pattern, then you can make a decision for an investment opportunity, in this case to the upside. And so that's that pullback. and then take a look at how the 5-minute turns. Now you are at 205. The direction of the 60 is huge. There is, see, at this point you're seeing the onset of downside pressure. I'm comparing the length of the price travel versus the indicator. We're short over here, so this is a downside pressure pattern. The 1 minute then tops out. So somewhere in this area would have been my choice for an educated exit without adding risk. Why? Well, because you had the 5-minute create a negative pattern with a lackluster 15, but nevertheless a pattern. And it has a lot of negative pressure building up on it. And so I consider this too risky. And so that is why I consider this right around here at 26% good enough. Then we see that the price goes up in here. Now we have an established divergence on the 1 with a definite negative divergence on the 5 at 225. And that takes us somewhere in this area to a 33%. We know that the price continued, but I couldn't have brought myself to stay longer on something like this. Then take a look at that 1 minute, do that pattern. If anything, you know, throughout this resistance over here, you definitely cannot stay. You definitely cannot stay. That takes you here to 41%. Then you have that huge dip, which is what we saw here. That dip brings the options down, as clearly indicated in there. And you have the surge back up, so the price of these options starts resolving to the upside by 310 over here on a new topping. You are now at 57%. Was that possible? Yes. Likely for me to stay on an investment like that? No. Because there's just too much risk. And so I just wanted to revisit this thing and see where these went. If you are interested in seeing the minutiae of this exercise, I highly recommend you go back and watch my video of yesterday, in which at minute, you want to go to, minute 33:52 on the actual video, or on the actual New York clock at 2:39, and I'm doing this study over here. And you know, I'm looking at the video, and it is possible that I talked about this with more detail, but it was not captured on video. But anyway, there's the study going on, and so you are welcome to go and take a look. As we approach 10 o'clock, take a look at how these options continue to deteriorate, and take a look at this divergence work its magic. So this, if I'm not mistaken, puts this into negative territory for the day already. The sustainability of the drop becomes questionable. It looks like a lot from here, but if you take a look at the larger context, this is a blip. Here's the 5-minute time lapse from 9:55 to 10. The hourly plots higher, the 15 lower, and there's the price. It's interesting. Remember how I said a few minutes ago that this thing was definitely going to move the price down? And that it did. From the open to here, we were above 207.30. So that's 30 cents to here, and another 30 cents to 206.70. So that's a 60-cent pullback. But it's not sustaining. Yeah, it's a 77-cent pullback. We can go here and take a look at the actual data for the day. We are plus 10 cents for the day with 15 million in volumes. Now here's a look at the 60-minute time lapse. Take a look at how the daily, with a little bit of drop, shrinks immediately, and the weekly advances lower. See that? We know what happened to the 60 and 15. Is this pattern enough to change the direction of that hourly? I would have to say not. But like I said before, it is a technical ceiling that will topple over this 60. What I would do probably on this thing, what I will end up doing probably, is just waiting this out to establish trend and then catch the first pullback, first regression, to pick up that 60 at some point. Right now, I don't see that 60 turning, especially this thing is running out of steam. Now, this could very well be just a regression on the newly established trend. That could very well be. I think it would be interesting to take a look at the 30-minute chart here. It's definitely turning over. It has technically topped. So there's that. And we approach the 10:05 mark. Just real fast, I will go and show you what kind of return the 207 puts that expired today made on this regression here. So there it is. It would have been an entry right on opening at 45. And by 9:58, you're at 68%. Taken from 45 to 76. Then you have this continuation. I was seeing this thing as I am doing the chart. Well, you build this pattern over here, and the price is starting to regress. Again, the sustainability of the drop comes into question. And take a look at how the 5 is actually a little short. I don't know. Let's say that I had actually participated in this move. I probably would have gotten out somewhere in this area here, just before 10, right here, and be very happy with a little extraction of value to the tune of almost 70%. Here's a glance at the 10-15. That's 10-10, 10-15. That 15-minute flattened, because take a look at the regression on the price after I saw that little divergence appear on the 1 minute, and the 5 minute was short. Now, this is not changing the context. The divergence is still very much there. So there could be another regression when that 1 minute gets tired, which is happening right now. Where you see the fact that the technicals on the 1 came back up this much is dangerous for continuity to the downside, because this creates support on the downside here. If there's continuation here, that will just create an upside divergence on the 1. 10:30, there's your continuation. There's the pattern. There's the price trying to bounce up. Can this 1 minute fight this? This looks long and tired. We have an upside pressure pattern here on the 5. And let's not forget that the hourly is still pointing up. But this hourly is starting to lose authority. 10:40. Take a look. This exploded to the upside. 67 cents. The 5 minute turn. The divergence in the 15 has not gone away. Take a look at how the price comes right back down. I don't know. With this type of pattern over here, we seem to be locked forever in here, and I see possible zigzagging of the price here. 10:45. We have eclipsed previously established stops on the open. And this exercise that we were doing earlier, take a look at how these options are now down here. 10:50. More upside. Now, take a look at this, okay? Here's another upside divergence on the 1, on a tired 5 that explodes the price to the upside, which is the trend. I fell asleep at the helm over here. The 207s most definitely made a nice return. Will you take a look at that? 10:29 would have been the entry. This was a perfect pattern for an entry. Even on the options, it looks good. 136% and continuing. Take a look at the direction of the 5. Wow. I was looking at the 5-minute time lapse. That's the moment of inception right there. Price explodes. Upside. Loss of momentum there on the 1. And now it's continuing. The direction of the 5 is extreme, and it goes right with the extreme poise of the hourly, and the 2-hour, and the 4, and the daily. Wow. What's staggering is 136%. Now it's at 84 for 154. I would be incredibly ecstatic and happy with 136. I need to be very, very careful seeing these patterns form on the 1. And the context was very, very good. The 15 was tired, the 5 was tired. It had already played out its little divergence. You have a pattern of support here. Boom, the price explodes. 11 o'clock, 11:01, the 1 minute capitulated. This thing made it to 86. 11:11. Take a look at how it forms a pretty entrenched 1 minute, but this explosion to the upside spiked the options over here like crazy. I mean, we made it to 160%. I would have been very happy here, but take a look at this. 224% by 11:07. And we have the regression. The 5 is really poised in here. 11:31. Pull back on this. Long. Pull back on this. Continuation. Wow. Take a look at where that takes this. 278% by 11:30. And obviously we flush out yet another pattern on the 1. Like I said, I would have been ecstatic here at 136%. But the strength of the trend keeps on pushing the price up. Amazing. So it's actually, price is actually moving higher rather than staying static. 12 o'clock or noon, continuation of the interruption. That 15 continues to exist. The trend to the upside continues to be incredibly strong. But all it's doing is creating a much more entrenched negative daily divergence. What we're going to need now is to introduce weakness to this trend via a couple of pullbacks and continuations that are going to give us pretty entrenched 15-minute negative divergences. It's going to be very apparent. It's going to be hard to miss when this thing finally comes in. Here's the options continuing over here. 141, take a look at how the 60 is long. You could say technically leading the price higher. The 2 and 4 hour charts are parabolic. I have a hard time believing that this thing is going to eclipse this top. The momentum is pretty intense. The context, however, is a pullback on trend, and the channel regression is very, very noticeable right now. I remember at some point I did say no more than 203 or 204, but this thing just exploded. I think one of the reasons is absolute market manipulation by the powers that be, the Federal Reserve, the bank cartels, propping the market, not allowing it to drop. Which, I mean, short term, yeah, great. The market is not collapsing, but at some point they're going to lose control, and this thing will collapse, because that's what it should do. A long time ago, we could have had a healthy correction, and with this level of manipulation, we went from a healthy correction to a full-blown out crash. See, over here, this would have been a healthy correction somewhere in this area, and then a more gradual growth, but no. QE1, QE2, QE3, bond buying have created this incredibly out of whack price high, and it will crash. The more they try to sustain it, the more this thing will come back down with a vengeance. Here's what the lower time frames look like. We have an entrenched negative 15-minute divergence. Looks like this 1 minute gap long, unable to sustain. Now it's pulling back and it comes back down, introducing weakness to the 5. I definitely missed a fantastic opportunity on this thing. This is 2 days in a row that I don't seize this opportunity. I need to change my frame of mind to continuation. Here's the one yesterday, and now this one today. Very clear entry patterns on continuation. This was one here. This is the other one. Are we going to get another one? 201, formation of this pattern. Could this pattern be another huge continuation? This 15 played itself out here. The 5 minute ran out of steam, and now the price is going up. I would like to have seen a 5 minute that had more erosion. I've been watching this stopping over here with the 5 and the 15. It looks like this pattern is going to be able to pull back against this. This 60 starts to look tired. And then if you go to VXX, take a look at how the 60 is starting to turn. But we need a 60-minute pattern at this point to be able to do something significant. Take a look at this 5 minute on Qs. Russell. Diamonds, pretty much the same as SPY. The market ended, and take a look at the upside. Because remember I was telling you about this, and I'm like, no, I'm not going to go against the grain here. It's risky. There it is. It surged. Take a look at the 207 calls that we've been following all day. This is my preferred exit, but just to illustrate, take a look at this thing, 496%, 581, 578, and at the end, at 359, you remember the surge, made it to 648%, and then the options came back down. What a ride. Wow. Now this upside over here is creating a pattern on the 15. Now take a look at this. The 5 minute, it's all broken to the downside, creating this pattern. But at the same time, you create an upside divergence in here, and this thing explodes. The only clear entry, I mean, there were a couple, but the really clear one was this one right here. And that's the moment at 10:30. And that gives you this. And from there, you can go, I would say, right here, which gives you the 136%. And then the next entry would have been somewhere in this area. Right here. With this pattern. This pattern happened at 208.60, so that puts you on the 209 calls. Now take a look at this, okay? I'm going to go to the 209s. I'm going to refresh over here, see how a lot of my stuff is going to get erased. Gone. Isn't that crazy? But it doesn't matter. Let me show you the 219s. Take a look at this insanity. This pattern that I was showing you just before 2 o'clock, 157, it even gives you a nice little divergence here on the options chart. And this thing went from 17 cents to 47 for a very cool and respectable 176%. Now, let's take a look at the exit. Over here, I mark it at 222. So on the actual stock chart, it should make sense. So here's the moment of explosion right here. Take a look at, this is 155, and then the price does the retest over here. See, at this point, it's not ready yet. Boom, divergence is created, and then this thing explodes. You have, the entry is like around 157. You could have entered here even at 2 o'clock. It's just that by 2 o'clock, this thing starting to get away from you. This would have been 2 o'clock, so that's 23. Still 104% if you do it from there. But the entry, the perfect entry would have been that divergence right here. And so what you're doing is basically, another thing is today I entered every hour the context. So here's the context. So this is 2 o'clock, boom, then there's the context. What's the context? Take a look at that daily on the upside, the 60 on the upside. Yeah, we do have a 15-minute divergence that is just not able to do anything. It did already here, the 5-minute run out of steam. Now we are bottoming positive over here on the context of this hourly with incredible poise to the upside, and so does the 214. So you're riding the 1-minute chart up, starts losing momentum. It tops out right here at 225. I'm going to be very suspicious because now I have a 5-minute negative divergence, and the 15-minute negative divergence has not gone away. So 225, maybe just before, would have been my exit. Let's see, 222. That makes sense. Because you have that divergence, and the up cycle of the 1 minute is over. Take a look at this. Boom. If you don't get out, you just give the money back right away, and the trade is destroyed. Believe it or not, these last few days have been incredible in the sense of experience gathering. Today was really good about me understanding the importance of grabbing 1-minute patterns, as long as the context is correct, with the 5 and 15 and so on the trend of that hourly that's been established. So there's another one. So those are the two good entries today. This one and this one right here. Here and here. Both of them given to you with good entries on the 1-minute chart. Here's one right there, right here, and here's another one right here. Boom, boom. So that's what happened today. Quick glance at Qs. Similar situation. Did Qs give you an entry on that particular setup? Here it is, at 2 o'clock. And then you also had this entry over here. Kaboom. Did Russell have that here? Not as clearly marked as on SPY and Qs. And at 2 o'clock right here, yeah, it's really a pattern. It's a head and shoulders. It just didn't have the pretest. It's a poor man's divergence. But the 5-minute was running out of steam. The context on the 60 was huge. The 15 and 5 had run their course over here, and so that was that. Diamonds had this pattern in here, similar to SPY at 2 o'clock, and then the one in the morning is right there. And last but not least, VXX. On VXX, I'm seeing something that I'm liking. I'm seeing the technical bottoming of the hourly, which is needed to create a pattern to turn this monster around. And this monster is really a 2-day divergence. Again, this thing is going to explode. SPY, similar. Take a look at that 2-day chart. We're retesting
it's going to be insane. I meant to go to Qs, not to VXX. Similar situation, pullback on trend. Take a look at the channel regression. We're right there. We're running out of steam. We are in the brink of technically topping that 60-minute chart. I think it's possible for the price to actually open to a drop tomorrow. Take a look at Russell. Search at the end. Huge upside here. And remember, we're looking at the 2-day chart over here. Diamonds. Take a look at that. All we need is to turn this monster around, and it is going to happen. FAS, similar situation. Similar situation. So there you have it. A quick glance at this list over here. Barrick Gold, continuing the upside. FAS we just saw, but take a look at that daily turned up. Hitting the channel regression in here. Freeport-McMoRan. Freeport-McMoRan, interestingly enough, had this poor man's divergence, really. It's quite interesting. I don't know if I would have brought myself over to trade that, but definitely callable. Take a look at GDX continuing the upside. Take a look at the trend of that daily. So you have the trend of the daily, and then you have this pattern on the 5, and price goes up. It's interesting because you have a 60-minute pattern over here that just doesn't want to go away. GLD forming that pattern as well. This is the reverse of SPY. Take a look at that daily. Holy shit, this is basically retesting all the way there already. This is going to explode. We just need to get this 60 out of the way. SLB. Just continuing the uptrend. Here, TBT, TLT, UNG, USO, and last but not least, the UUP, the dollar going up again. If I go to the larger context, this is not good for the dollar because this is forming a catastrophic monthly negative divergence. So anyway, tomorrow is the opening of the quarterly and monthly. Let's see the plot. I think it's possible that tomorrow we open to a pretty interesting run. I couldn't trade that no matter what. So I leave you with these thoughts. Let's see what happens tomorrow. It's going to be Friday, July 1st. Until then.